REIT market rebounded strongly in 2009. What's in store for 2010? We're joined on the phone by Jonathan Litt, Managing Principal of Land and Buildings Investment Management, to get his outlook for this coming year. Jonathan, bottom line, will REITs be up or down at the end of 2010?
We titled our outlook for 2010, On the Mend in 10. And our thought there was that REITs will have a tailwind and will likely post positive total returns. When we first started this piece was in late November, early December, and we had said strong positive total returns. Given the more than 8% move from when we started it to when we finished it, I think positive returns is probably a better way to characterize our outlook for 2010.
And Jonathan, most economists and analysts seem to think that REIT fundamentals will be down in 2010. Why then should we expect to see stock prices continue to rise?
So on the rent and occupancy side, I suspect that we will see, for most of the property types, a continued pressure probably through the first half. In the second half, I suspect that we're going to see net operating incomes be negative on a year-over-year basis, but on a monthly sequential basis, we're going to start to see improvement in both rents and occupancies, and that will continue through into 2011.
And what do you consider to be the biggest positive factor working in REIT's favor in 2010?
I think clearly it's a continued healing of the capital markets. We have seen from even in 2008 and most notably March of 2009 that the cost of debt has come down dramatically. I suspect that will continue. And the availability of debt from non-existent to a trickle today should improve to a bit better than where it is. And as the debt markets continue to heal, I think that we're going to see cap rates potentially come down some more, commercial real estate values improve a bit, and I think that tailwind is what will most likely serve the REITs well because it will allow them to get active on the acquisition opportunities.
And are there any potential problems out there that could threaten the strong performance you're predicting?
So much of the demand for real estate is based upon jobs, and we will be watching, and investors in the real estate space should be watching the jobs numbers. And if those jobs numbers don't go positive and stay negative or accelerate to the downside, I think we're going to have a problem, not just in real estate, but in the broad economy. And the other big risk, and I mentioned this a little bit earlier, is if the mood in Washington, whether it's monetary or fiscal policy, is one that is no longer supportive of continued stimulus policies, I think that's a very big risk. So you kind of need to keep your finger on the pulse of the job market, and you need to keep your finger on the pulse of what's happening in Washington.
And Jonathan, do you expect any specific sectors to have particularly strong performance in 2010?
I think we're going to see in the regional mall space, the high-quality regional malls will be a beneficiary as retailers look to be in the most productive malls that they can find. And the higher quality regional malls that have those assets are going to see retailers staying in the space and potentially expanding into additional properties. We like the CBD office market because it got hit so hard in the downturn, principally concentrated in financial services.
All right. Well, thanks for your time, Jonathan. For more information on this and other REIT news and analysis, check out REIT.com.